Hey guys, what's up? I'm Erin and welcome back to the channel. A couple weeks ago, Vanguard released its annual How America Saves report. And if you've ever wondered how much the typical American has in their 401k, how much they have in their 401k based on age or based on income, are they capturing their company match? Does gender influence 401k balance? This report is for you. But just in case you aren't interested in reading the entire 100+ page report, that's what this video is for. With this video, I'm hoping to give a highlight reel of the information I think you might be most curious about, but if you are interested in reading the report, I will link it down below. It's also worth mentioning that the account balances for this report are as of December 31st, 2021. And as we all know, 2022 has been a pretty rocky year, so it's probably safe to assume that today the account balances are slightly less than they were at the close of 2021. But nonetheless, looking at these figures does help us to get a better picture of where people currently are. It is helpful to note that this report does look at over 5 million accounts held with Vanguard. And it looks at all defined contribution plans, not just 401ks, so that includes 403bs as well as profit sharing plans and things like that. For a simple bird's eye view, the average of all account balances comes in at $141,000, and the median, or the exact middle, is about $35,000. But of course, a bird's eye view isn't the best way to look at account balances. It misses important things like age and income, job tenure, all of which are major contributors to the overall account balances. So we're going to break it down a bit further. But as with all videos of this type and by popular request, I will include both the average and the median. So let's get to it. For those aged 25 and younger, the average account balance is just over $6,000, and the median account balance is about $1,700. Clearly, these balances reflect that many of these workers just got started in their working years, and thus they're just getting started with their retirement plans through their employers. Interestingly to note, though, 40% of all Americans do start saving for retirement in their 20s, which is phenomenal because the earlier you start saving, the easier it is to build wealth. For those aged 25 to 34, the average account balance is about $37,000, and the median account balance is about $14,000. Financial advisors will traditionally recommend having 1 times your annual income saved up by the time you hit 30. Based on the fact that the median account balance here is $14,000, it's pretty easy to see that most people are not hitting that mark. But it's important to remember that 30 is still young. You have lots of savings and investing years ahead of you. So just slowly work on increasing the percentage that you're putting away. If you find yourself in the category that you're a little bit behind, if you get a raise, try to allocate more towards savings. If you get a bonus, throw that entire bonus into your retirement plan and you'll catch up in no time. For those aged 35 to 44, the average account balance is $97,000 and the median account balance is about $36,000. A general rule of thumb is that you want to be saving anywhere from 15 to 20% of your income. By the time you hit 40, you want to solidly be at that 15%, if not closer to that 20% mark. Most experts do say that you need anywhere from 70 to 80% of your pre-retirement income in order to successfully step away from the workforce and maintain your standard of living. Of course, it really does depend on the lifestyle you want to live, but the earlier you start saving, the lower the percentage you have to save. The older you start saving, the higher the percentage you have to save. For instance, if you don't even start saving for retirement until the age of 35, you're going to need to save at least 24% of your income in order to be on track to retire at 65. For those aged 45 to 54, the average account balance is $179,000, and the median account balance is almost $62,000. Generally speaking, this is the age where most Americans will hit their peak earning years. So that should also mean that it's your peak savings years. And a wonderful goal to set at this time is to try and max out your 401k if you've never done that before. The max contribution limits for 2022 are $20,500. But if you're age 50 and older, you can contribute an additional $6,000. So if you hit either of those metrics, you're absolutely on your way to supercharge managing your retirement. But if you want to be a total overachiever, you could still contribute that $6,000 to your IRA, whether it's a traditional or a Roth. And if you're 50 and older, you can contribute an additional $1,000 catch-up contribution to these accounts as well. And a little side tangent here, does anyone else think it's absolutely ridiculous that the max contribution limits for the IRA are $6,000? They didn't get a boost this year. 401k got a boost, but the IRA didn't. They better get a boost in 2023 because $6,000 is just ridiculously low as a cap contribution limit for a retirement account. For those age 55 to 64, the average account balance is $256,000, and the median account balance is almost $90,000. Again, looking at what experts recommend, by the age of 60, you should have 7 times your annual income saved up for retirement. Let's say you have an income of $60,000 by the age of 60. It's recommended that you would have saved up $420,000. It's clear to see that most Americans are missing the mark. This is also the age bracket where you're going to be doing those final legs of your retirement prep. Assess your overall risk tolerance level as you prepare to step away from the workforce. Do you have access to near-term investments as well as long-term investments? You want to double, triple, and perhaps quadruple check your retirement plans to make sure that when you step away from the workforce, you are set to enjoy your golden years and not have to stress about money. Finally, those age 65 and older, the average account balance is almost $280,000 and the median account balance is almost $88,000. Understandably, these account balances become a little bit stagnant at these ages because the typical American retires at the age of 62, at which point they are going to step away from the workforce, start withdrawing from these accounts rather than making contributions to them. Impressively, a full 51% of plan participants are contributing above and beyond what it takes to capture their plan match. AKA, they are contributing up to the match and then some. 18% are contributing just enough to capture their employer match. And then we have that final 31% who aren't even contributing enough to their employer-sponsored plan to capture the full match. And that's the group I want to address. Likely they're not watching this channel at all, but in the off chance, you need to be contributing at least up to the match. That is free money that you are leaving on the table. If you were just walking down the street and saw a $50 bill on the ground, would you pick it up? Of course you would. That's free money. Don't pass up free money. While age is a contributor to overall retirement account balance levels, so too is income level. The higher your income level, the higher your account balance should be because you should be able to save a higher dollar amount. Also, the higher the income you're going to need to replace in retirement as you grow accustomed to living on a higher income because for most people, lifestyle inflation is a real thing. And this is exactly what we tend to see. The higher the income, the higher the retirement account balance. The most significant increase in 401k balances seems to come after the income range of $50,000 to $75,000. After this point, the median balance is roughly double for every age bracket, and averages follow a similar pattern. However, these median and average figures still do show that people of all income levels are putting away less for their retirement than is recommended. With workers of all ages being included in these income brackets, you would expect the average and the median incomes to be drawn up higher if most people were on track with their retirement savings goals. However, with 2/3 of Americans living paycheck to paycheck, maybe lower than expected savings should be, well, expected. Perhaps helpful to see, 41% of all accounts have balances of at least $50,000, and 15.3% of all accounts have a minimum balance of $250,000. Having a 7-figure account balance still puts you in the top 1% of plan participants. Gender also has an influence on account balances. Men tend to come out ahead, with all men in general having an average account balance of $171,000 and a median account balance of $45,000, whereas women as a whole have an average account balance of $119,000 and a median account balance of just $31,000. With both the average and the mean, men have an account balance that is roughly 44% higher than their female counterparts. Vanguard even notes that women on average tend to have lower incomes than men, but they do add women tended to save more than men at each respective income level. Although they found that women tended to save a greater percentage, men on average still save a higher dollar amount because they had higher incomes, so even a smaller percentage left them with a higher dollar amount invested. And if you're interested in seeing things broken down by income level and overall savings broken down by gender, here's how men and women stack up against each other. When it comes to both average and median, men have higher account balances at practically every income level. Now, as to why men, even at the same income level, surpass women in net worth, well, studies suggest that that boils down to men simply being more willing to invest their money in the stock market. Men are generally more accepting of risk and invest their money more aggressively, which tends to leave them with an overall higher net worth. Now, of course, generalizations don't apply to every man or every woman. Generalizations are just that, broad sweeping statements that can't hope to capture everyone's individual unique circumstance. But no matter how you slice it, the boys are besting the girls when it comes to investments. Generally speaking, of course. Further, men tend to participate in their employer-sponsored plans at a higher rate when given the chance. A greater percentage of men max out their plans, 13%, while only 9% of females max out their retirement plans. And as far as men and women over 50 who max out their plans as well as that catch-up contribution, well, 17% of men do this and only 11% of females. Now, as a female who is fairly interested in finance, this is always a point that befuddles me. Even my channel has an audience that is 85% men. And don't get me wrong, I love the boys, but where are my females at? I am genuinely curious as to why money and finance are overly dominated by men. And this is a conversation I frequently have with people who are close to me. And if you're willing to share your thoughts, I would love to hear your perspective, because to me, finance isn't a gender-specific topic. Finance is an everyone topic. Everyone should be wanting to take care of themselves, financially speaking. But for some reason, it seems that men are predominantly more interested in these type of topics than women. Why is that? At the end of the day, most of these stats do follow a similar pattern. As people get older, their income levels rise, and thus their account balances rise. As their income levels rise, they tend to save a greater percentage of their income. Quite simply, saving and investing becomes more affordable as your income increases. The biggest influence on account balances are age, income level, and how long you've been with a job. But as these stats do show, most Americans could stand to save a little bit more to ensure that they're on track for their retirement. Let me know your thoughts in the comments down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing, or if you know of someone who might get something out of this type of content, please consider sharing. I hope you have a great day. I'll see you soon. Bye. This port compiled the data. 401ks, 403B. And as we all know, 2022. I'm just gonna give it a minute, because once that starts, of where people currently stand. Oh my gosh, you need to stop. They are actually, oh my gosh. It's also worth mentioning that I am going to post at account types, because recommend that you'll 15 to 20% of your income. What the heck? Most experts. But of course, that's really a course. Max contribution is As of 2022, so it should also be, or a traditional variety. So that also wants, generally speaking, is of your retirement prep. This is also, oh my gosh. This is also, oh my gosh. Overall risk tolerance. Woo! At these ages, income you're going to need to replace is income level. What the frick? While age, for all retirement count, the more you should be able to contribute. Where do I want to go with that? Also, the higher dollar amount. Yep, let me wait for when the airplane passes. Okay, I'm gonna go back to filming. With workers of, well, studies suggest cannot accurately, that cannot hope to capture. What is that? It comes to investments at 15%. Don't apply to, just don't understand that why it seems